Let me start the webinar. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. We are into the new month of February 2016. During the first week of February, 1st to 15th, 1st to 5th of February, what are the expected market moves? I'm going to explain during that of the Asian session live market analysis and the forecast. And we are on 1st of February between 5 and 5:30. I'll give the forecast and review it by weekend or Friday, and then find out the accuracy of the forecast. So I'll give the session-wise forecast and also the market reading, besides the levels in which the currencies are expected to swing. Also, I will try to give it, besides the trade recommendations for today. My contact details are given here. In the event, if you have got any doubt after that of the webinar, you can ask me through the email or through Skype chat. And if you have got any doubt during the time of the webinar, you are welcome to ask me in the FX Trade Forex video, live video window, and I'll be willing to answer those questions. The last week for the month of January, we have seen the market was making good move on the upside, and finally on Friday during the US session, after establishing the high in the case of JPB around 1.44 and in the case of Euro around 1.0970, they made the big drop on Friday as dumping of the positions. This they had done it mainly in order to accumulate a gain at the lower level, the positions, in order to gain during the of this week and also during the coming weeks. And especially during that of the month end and the month beginning time, you come across the trend reversal. So the monthly trend reversal is expected to continue during this week also from last week, that is 1st to 5th of February. You'll come across the trend reversal move. So what is the meaning of trend reversal? That means they will make a very volatile move and rise. So they will rise and then suddenly make a drop and induce all the traders to liquidate the long position and then continue to rise. This sort of moves they are expected to make during this particular time frame. So we can only do the swing trade using the trailing stop and use the trailing stop to maximize the profit. And in the event, if they suddenly drop, the trailing stop will protect you, will protect your profit. And if they try to gain further upward, you can always use the trailing stop to maximize the profit, besides the trailing take profit order. So that way you will be in a position to limit the risk during that of the trend reversal time. During that of the trend reversal time, if somebody says that market is highly volatile, I'll keep away and things like that, that means great trading opportunities they are missing. Actually, during that of the first and the last week, they make volatile moves and the big moves in order to handle the derivative market, the options and the futures, and also the forward cover, etc. When they make such extreme moves, the players are in a position to earn very big money out of those markets because they are all leveraged trade. So once the traders take positions by paying a small premium and take the positions, and when the market goes against, the premium is lost, and also they may have to pay further money in the event of the futures. And in the case of options, they lose the premium what they have paid. So here you find a situation wherein the players are more interested in earning money from the of the derivative market. And also they set the highs and the lows for that particular month. Thereby they are able to handle either side during that of the month, make a downward stop and upward stop, etc. That way they are in a position to maximize their profit, because the players have to necessarily make such volatile moves in order to make money, so that the traders lose the money in distress. So create the distress condition, create the euphoria every time, create the situation wherein the traders could feel that is going to be the end of the world. And then when the traders make such a distressed trades, the players make big money. So it is a question of trying to frighten a person when he is in dark and grab his purse. So a similar situation is being handled, because that is the only way to make money when you want to invest money and make money out of that without converting it into effort. Then the cunningness is the only tool with which they will be able to earn. Now coming to that of the forecast for this particular week, today, 1st of February, during that of the Japanese session, they are expected to make the swing and from a move and continue to rise during that of the European session. And then when people think that the going is good, they will make a sudden drop during that of the US session. Then tomorrow, during the Japanese session, they will make a dip during start of the Japanese session and then rise and again slide during that of swing and slide during that of the European session and slowly firm up during that of the US session. And Wednesday, they are expected to make nice gain during the Japanese, European, and also the US session. Then on Thursday, 4th of February, swing and rise is expected during that of the European Japanese and slide during the European session and then rise during the US session. Then everybody will be talking about the non-farm payroll, etc. The players are expected to make quick rise during that of the Japanese session and continue to firm up during the European session on Friday. And then they are expected to make a dip during the announcement of the non-farm payroll and also during the start of the US session and then start gaining the levels. So that way they are expected to handle the market during Euro and GBP during this particular week. Then second week of February, next week, 8th to 12th of February, the upward trending move is expected to happen in the market. Then we will come across the visible rise happening in the market. Now coming to the levels, in which the currencies are expected to swing, Euro could come down briefly below that of 1.08 if needed, and then they are expected to gain further upward. And GBP again, they are expected to slowly swing and gain the levels during this week. And you'll come across during the first week of February, they gain about 100, 200 pips and then drop about 50, 60 pips or 70 pips. That way the volatile move will be. So the best thing is grab the positions by today, tomorrow, and then try to keep stop at entry and then try to capture some good profit when there is an upward swing. And in the case of yen, we have seen that they came down to almost close to 115.97 and then gained quickly last week the levels to 121. And then they are expected to hold around 121 and slowly gain the levels to 123, 124 level. They are expected to make the one-sided move. If you look into the net changes of Euro GBP and US dollar, Euro GBP and USD yen, you find all are in positive net change. I'm showing it in the live market code page. So when all the three currencies, the numerator as well as the denominator, show the positive net change, we understand that it is a contrarian move in order to handle the yen crosses. So they handle the commodity crosses last week. By the end of January, they handled the commodity crosses. Now they are handling the yen crosses. They made the drop in the case of yen and started gaining the level. And then also they were not dropping Euro and GBP at that time, and then they started gaining the levels, and they expected to continue to gain the levels in yen and yen crosses. So for that, they will gain the levels in the case of Euro, GBP, and also USD yen. So dips are buy opportunities in yen and yen crosses. But still use the hedge order to limit the risk. In the case of crosses, you can keep 50 pips hedge order. Then in the case of CHF, they made a massive rise up to that of 1.02, and then They are expected to make a swing to that of 1.0150 and then gain to 1.0375, and currently they are holding around 1.02. So you would have noticed that when they made the massive drop in the case of another denominator currency USDN, they did not drop in the case of USD-CHF. So when Euro and GBP were gaining, USD-CHF were holding and slowly gaining the levels. As a result, all the European crosses, they handle Euro CHF, and also GBP CHF, they handled nicely on the upside. Then in the case of Canadian dollar, after holding around that 1.46, and they made an extended upward stop and started making one-sided drop and came up to that 1.40 and below last week, and they are expected to make a swing to 1.41 as a brief upward stop and if needed, and then start making the slide. This sort of one-sided moves, they do it in a thin volume currencies, especially Canadian dollar and also the crosses. So one has to be very careful. If you are struck on the wrong side, then you may have to lose the shirt if you trade without a stop or a hedge order. Then in the case of Australian dollar, they slowly gained from 0.68 to 69 and 70. They will hold it and slowly gain to 7172, and then 72 could be the support, and then they will start gaining further upward in the case of Australian dollar. So these are all the levels in which the currencies are expected to swing in this week. Now coming to that of the market reading. So I noted down the initial lows and the highs around 3:30 GMT in all the four majors and two commodity pairs. Then Euro formed the low 1.0815 and the high 1.0849. Their low they are not breached, but the high they are breached and went up to 1.0853 and holding around 1.4647. They made a brief upward stop and holding closer to high, and they are expected to make a small dip, induce the traders to liquidate the long position and then try to gain the levels. Then in the case of GBP, 1.4228 is the initial low, which is not breached. 1.4265 was the initial high. They breached it by 1 pip and holding slightly closer to that. They are expected to make a little bit volatile move during the late Japanese session in Euro and GBP. And in the case of Yen, 121.11 is the low, 121.49 is the high. They are not breached the high or low. They are simply consolidating here, giving that impression to the traders when Euro and GBP gain, USDN could make a drop, but they will simply hold it. And they could make a drop in the case of USD-CHF, but not in the case of USD-Yen. That is how they just make the moves in the market, so that the traders try to correlate, okay, USD-CHF has come down, so USD-Yen might also come down. The traders might short, but they will simply hold and start gaining the levels. How they had done it last week in the case of USD-CHF. Then in the case of CHF, 1.0215 is the low, 1.0250 is the high. They are not breached the low or the high. So in the case of USDN, USD-CHF, they are not breached the low or the high. In the case of Euro and GBP, they breached the high and holding closer to that of the high now. In the case of Canadian dollar, 1.3970 is the low, 1.4013 is the high. They just breached it by 1 pip and come down. They are expected to make either way swings and consolidate here to induce the traders to take either way positions. Some traders might think that it is better to take a long position. Some may view it is better to take the short positions. And after the traders commit positions, they will make one whips or move and slide. Australian dollar, 0.7044 is the low, 0.7066 is the high. 86 is the high. They are not breached the low or the high. So we find they are not breached much of the currencies. The highs are the low. So we have to carefully watch how they are making the moves, and accordingly, near the low, you take a buy and wait for them to breach the high and book profit. That sort of moves. that sort of trades you try to do it in all currency pairs. Now coming to that of the trade recommendation, I just recommended a trade, keep a buy limit order in the case of Euro 1.0830 with 1.0860 as the take profit order, and 800 is the hedge order level. And similarly in the case of GBP, in both Euro and GBP, they are not breached the low, and they may come little bit down, but they may not breach. So 1.4250 we can keep a buy limit order, and 4.3 we can keep the exit order, and 4.220 we can keep the hedge order. The case of Australian dollar, 0.7050 we can keep the buy limit, and 7100 we can keep the exit, and 7020, 30 pips below that of the buy limit, we can keep the hedge order to limit the risk. This way, you can keep the orders. When they swing and fill, the order will be in a position to take profit in such positions. Because when they are holding, don't commit any positions. When they make a quick downward move, you try to take a buy or keep a buy limit order to book. Take a buy position, and then when they quickly gain the level of profit after keeping stop at entry. So these are all the market timings. As you notice that early in the late sessions they handle the majors, and the mid sessions they handle the crosses. Until March we will follow these timings. So if you've got any questions, you can ask me. I'll be willing to answer those questions. Okay, Hassan has got a question. Sometime in November, you mentioned that Euro will gain significantly at the beginning of the year. Is there any chance to this? Yes, definitely Euro will gain more suddenly. And see, what the players are doing is they've made huge swings in the case of Euro GBP and also Euro CHF. So they found that many traders were not taking positions in Euro. Instead, they had taken the positions in the case of Euro crosses like Euro CAD, Euro CHF, Euro GBP, etc. So that is why they focused more on handling those pairs and induce them to liquidate the positions. Ultimately, the players make all the big moves in order to earn money, not to get any reward from any government telling that, okay, we gained the levels in the case of Euro, so kindly give us a reward. They cannot ask like that. So they can only make such moves in order to earn big money from that other market. So ultimately, we need to, I am deriving the forecast and also fine-tune the forecast using the market trading. So the forecast is to give the trend of the market, and also to a certain extent the levels at which they could be making big swings, like how I am giving it for the week, I am giving it for the month and also the year. And sometimes they may breach, or sometimes they may just achieve it, or sometimes it will be below that of the expectations. But almost close to 90-95%, the trend they will maintain as given by that of the forecast. So that is why I give the forecast and ask you to fine tune on a daily basis, session-wise basis, using that of the market trading technique. Besides, if the market goes against that of the expectations of the forecast, we should not lose money. That is why I recommend the trading strategy as well. Hope you are able to understand that how we have faith in the forecast, but we don't have a blind faith. So we always become cautious and have the contingency plan in the event if it goes against, so that we don't become surprised. Because becoming surprised is the first enemy for a trader. When the trader becomes surprised and become euphoric and immediately it does distress trade. After the rise, he go and buy, or after the drop, he buy, sells. So invariably, one or two occasions you might make quick money, but many of the occasions, such quick moves will trap them vulnerably. That's why I always say that trade calmly and market rewards patience. And Alton has got a question. How about Euro GBP cross this week? Euro GBP cross is expected to come down a little bit and then start gaining. And the one-sided gain is expected to continue in the case of Euro GBP for a longer time. So always keep in mind, in the case of European crosses, they predominantly do one-sided moves for a prolonged period because they know very well the traders have got the tendency to take positions, add positions to that, thinking that the market will reverse and they can just come out with a break even. And the players will see how they have done it in the case of USD CAD, gained about 600, 700 pips. In the similar way, they will gain in the case of European crosses also and induce the traders to go in for a huge short covering. So dips are buy opportunities in the case of Euro GBP. Any other questions? If you've got any question, you can ask me in the question answer window. Otherwise, I'll display the forecast slide. Here you come across the expected market moves for each of the sessions of the day, the 3 sessions of the day, and also for the week. So each session, swing and firm up means if you do a buy and sell trade, if you do a buy and sell trade and sell and buy trade, you'll be able to make nice profit. Aim for about 30, 45 pips profit, you will be able to achieve it. And also keep in mind what currencies they are trading or making a good move. And accordingly, you choose the currency so that you will be able to quickly book profit. Don't every time trade in Euro or every time trade in GBP. And you identify which currency has made spread for more than 40 pips. And if they are closer to low and not breach the low for more than 30 minutes during early or the late sessions, take a buy. You'll be able to definitely close it with profit by end of the session. Thanks, Michael. Any other question? So you can see how exactly they are handling the yen crosses, slowly gaining the levels in the case of Euro and GBP and also USD yen. They are handling the yen and yen crosses at the moment. And in the case of CHF, they are showing USD weakening move, and Euro and GBP, USD weakening move, but USD yen, they are making the USD gaining move. But in the case of commodity pairs, they are making USD gaining move. Aussie negative rate change, and Canadian dollar in positive rate change. So they are now come to the top of the crosses of commodity pairs. So after handling the yen crosses, they are just briefly handling the commodity crosses. And during the mid sessions, they are handling the crosses. So they will handle the crosses during the mid session, and you can easily identify with the help of the live market code page by watching all the 6 pairs and also their net changes. Because in the case of majors, they are all traded against US dollar. But in the case of crosses, they are all traded against each other. No US dollar involved in that. So you should be able to easily recognize how they are making the big moves in the case of the majors in order to bring in the volatility in the case of the crosses. So it is not the crosses which influence the major. It is something like you are telling a child is able to lift his father. So it is not possible because the volume is very less there in the case of crosses when compared to that of the majors. So they always handle the majors, and that will give an impact in the case of the crosses. Okay. The expected levels in which the currencies are to trade in this week are given here. So you will come across slowly gains in Euro GBP and USD yen. Either way moves in the case of USD CAD and USD CHF, and slow gains in the case of Australian dollar. So these are all the expected moves. So I don't find any question being asked. So I'll try to conclude the forecast webinar. So these are all the initial lows and the highs and the trade recommendations I could in it. Okay. So I take this opportunity to thank FX Trade for the facilities provided to present the webinar, and also you people for your kind presence and also listening to the webinar in order to make profitable trades in the market without much of a market fear. But you can be cautious, but there is no need of a fear involved, provided you understand how the market is manipulated by using the market reading technique. So thank you one and all. See you on Friday. At that time, I will review the forecast and we'll see how accurate the forecast is and how dependable it is for us to take positions. Wish you all happy trading. See you on Friday.